Don, thanks very much for joining us today. Look, I'm going to start with, our viewers will definitely have seen a Mainfreight truck at some point or your branding somewhere, but I suspect most of them aren't familiar with just how big your business has gotten now. So can you just remind us about the network globally and where you stand today?
Yeah, I guess the strength of us here in New Zealand takes away the mystique of what we've got elsewhere around the world. We're in 26 countries. 331 branches and 11,311 people these days. So we classify that as each area as a region: Europe, Asia, the Americas, Australia and New Zealand.
Yeah, it's some pretty phenomenal numbers, isn't it, really, when you think about it?
Yeah, I guess if you look back 10 years or so, we've come a long way, but we've still got a long way to go.
Absolutely. And look, I hear you talk about the network effect a lot, and I know it's a big part of your strategy. Can you give us a bit of insight into what that means in practice? Do you typically win customers in a specific part of your business, and then how do you translate that into getting them to do more business with you?
Well, there's three core parts of the business: is domestic transportation, warehousing and international air and ocean. So that's sea freight and air freight. And we win customers across all three categories. It might be that we win a transport customer and then we will look to add more benefits, look for their import, export freight, look for their warehousing wherever possible. And likewise, if we win a warehousing customer, they can't come to our warehouse unless they want to use Mainfreight outbound.
Right.
And then we would also try and convert them to come and use us for the air and ocean. But I think the benefit of the network is that it's Mainfreight people dealing with Mainfreight people looking after our customers. That's where the quality lies.
And I suppose that makes those customers a lot more sticky, doesn't it? If they're not using just one service, they're using two or three, the likelihood of them walking away is probably less.
Oh, you're still under competitive pressure, but it's about providing the customer with an efficient supply chain, and it's not about clipping the ticket at each end. It's about making sure the customer's got the best supply chain for the supply of goods around the world.
The last few years have been phenomenal. They have just been something clearly we haven't seen before for the logistics and shipping industries. So what's been the impact on your business, and has it led to any structural changes for the industry to what was normal pre-COVID?
Well, we're a bigger and better business as a consequence. I mean, we were all shocked once COVID hit and we had no idea what that would do to supply chains. Well, in retrospect, we now see what it's done, and government stimulus in terms of spending power became at levels we hadn't seen before, and that helped us grow a bigger business. And it's helped us diversify a little bit further. We've intensified our networks. We've actually earned pretty well. If you looked at our profit before tax in 21, it was a couple of $100 million. You look at it, this result we've just applied, it's $587 million. So, we're a better business because of it. And I think as we come out of the supply chain congestion, our customers are probably far more strategic about their supply chains than what they were before. Now that's good for professional operators like ourselves, because we can provide them with the right means to which to manage their supply chain and find that efficiency that they will need.
Yeah, and those profit numbers you mentioned, the big changes are quite phenomenal. So it would be fair to say that investors shouldn't be surprised to see some of that sort of normalisation and those numbers walk back down to a more normal level?
Oh, who knows? Look, we, as far as we're concerned, we'll only compare ourselves to last year, and we'll either be better or we'll be online, or we might be a little bit poorer. But the reality is we've got a strong business. We're not interested in just the next 12 months, we're interested in the next 100 years.
And you talked about you're in the Americas, you're in Asia. I just want to focus back on the domestic market in New Zealand, and you've got customers, across all industries. So can you give us a bit of anecdote of how you're seeing the New Zealand economy? Are there parts of it, are you seeing some of that slowdown that we're seeing in some of the data, and are there specific industries that are doing better than others?
I think building supplies, discretionary spending, whiteware, brownware, you can see that that's slowed. But food and beverage, DIY, which is a big part of what we do, has remained consistent. People still eat and drink no matter what the economy is doing.
And your balance sheet is quite interesting because compared to a lot of other listed companies, you in fact now I don't think you have any debt at all. You might be in cash position. So is that a deliberate ploy? And how do you balance up, the strong balance sheet that you've got with the need to invest? Because you're always investing quite a bit, but I assume the opportunities are somewhat almost endless at the moment. So how do you balance the two?
Well, you need to be disciplined with your capital. We've shown over the years that we're very disciplined about that. We can see where the growth lies and we will invest where we expect that growth to be. We'll spend 676 million in CapEx over the next 2 years, and that should give you some confidence about the strength that we've got in the business and where we see the future. Some of that's replacing facilities, some of that's new facilities. And for us, some have said that it's a lazy balance sheet, but for us, we've been consistent with our dividend. We've been consistent with the investment in the business in the long term, and as we've grown bigger, dividends moved. We were looking at that dividend policy, which has been 40% of net profit. 2016, it was 32 cents. This last one we've just announced is 172 cents a share. So, consistent with the dividend, disciplined with our capital expenditure, and who cares about what the debt looks like?
Yeah, absolutely. And I think you're in a position that a lot of companies at the moment, particularly with interest rates going up, would envy. Having no debt compared to the cost that is coming through in those businesses from having that debt, isn't it?
Yeah, sure.
And lots of those companies also talk about inflationary pressures. I mean, you can't speak to any management team without them talking about it. I assume staff, labour, fuel, those are probably some key ones for you. So how are you managing those, and is it a simple fact of passing on some of that pricing, or do you try and gain some efficiencies in what you're doing?
Well, people, not staff. The people that work for us, we go to them on the 1st of April every year with salary reviews, and you might think that's a bit crazy in high inflationary times, but we need to keep our people ahead of inflation. So we increased their salaries on the 1st of April. That means we have to go to the customers with rate reviews. Unfortunately, in high inflationary times, the customer has to pay. And probably at the end of the day, you and I are paying for that through the supermarket and when we buy a bottle of wine or a bottle of beer. Fuel is a pass-through. It's been up and down over the years, and I think the network understands how fuel works now. But so certainly there is inflationary pressure. It is costing more to serve our customers. And we've just got to be better at managing that. And because of the decentralised nature of our business, each branch manager, 331 of them, has the opportunity to manage their costs, and that's the best way to do it.
Yeah, right.
As close to the customer as possible.
Sure. And I'll go back to my faux pas. So it's people, not staff. And I want to touch on that a little bit more, because culture has been, as long as I've sort of, looked at Mainfreight, and every time I've heard from you, culture's been a huge part of what you talk about, particularly going into new markets. What are the things that Mainfreight does to build that culture?
Well, we call it the flywheel of culture. You've got to flick it all the time. You've got to live it, you've got to breathe it. And, we're lucky enough to have Kiwis and Aussies who understand the culture in some of those other markets. We're not a big acquirer of businesses. I know it might look that we are, but we haven't acquired a large business since 2011. So the way we act, the way we do things, some stuff is non-negotiable. And, you've just got to push hard to make sure that that's understood by everybody. But it's an evolving process. And, it's been said that the culture, the further away it is from the Vatican, the weaker the religion is, right? Yeah. Well, that means we just have to work harder in some of those new markets that we're in. We're lucky enough to have some great people, and there's a lot of believers in what we do, and the culture is a key differentiator for us.
Yeah, I think it's certainly been a key part of the success story, hasn't it? And it's certainly not faltered in terms of your guys' commitment to that culture. So.
Well, just come back to that original point that you made. We don't see them as staff, they're people.
Yeah.
And if we deal with them as people, as individuals, but part of a collective team, then we'll go a long way to looking after them.
Yeah. And now your bio says something like 40 years in the industry. So I want to ask you, is there it'll be hard to point out one thing, but is there something that's dramatically changed in the industry over that time, whether it's within your own business or within the customers that you serve?
Well, customers are looking for better service, high quality freight services, there's no doubt about that. But for us, we've managed with this business, small business, 45 years old, we've now managed to get around the world, and in those markets, there's so much opportunity for us. So we've seen size and scale, we've seen automation, we've seen computerisation, and we've seen efficiency build, and we've got a lot more of that to do. So we're excited by it. It's the lifeblood of what we do, and it's a whole heap of fun anyway.
Yeah, and now before I let you go, and I know the answer is probably going to be by Mainfreight, but if you have a piece of advice for someone watching today, someone potentially who hasn't dipped their toe into the market, have you got something that stuck with you over the years in terms of your own investing?
Yeah, the best piece of advice I think is buy with your eyes. Like, know what you're buying and why you're buying it, and understand it, and then hold it for a long term.
That's fantastic. On that note, thanks very much, Don. Appreciate you taking some time to speak with us.
Cheers, mate. Thank you.